I don't think I'm gonna restream anymore. So inconsistent. Okay, we're back. Did I go down there for a bit? Eyes coming down here. BBY is almost back up to VWAP. GME just below VWAP. HKD just at VWAP. If you guys couldn't hear me for a bit, it's because the stream was down.
Now,
but
in
could you hear
distribution
me
cost per
or
unit.
not?
So I don't
like
see how anybody
reconnected.
catches them, our Costco, as far as serving the consumer.
Right, and to your point, I mean, you've both talked about how people are trading down, and that has been a good thing for some of these names over at Argus. I know you have buy ratings on Walmart and Target and Costco. You did talk about the challenging environment overall, right, for these retailers, Chris. And when I think about some of the others like Dollar General and Dollar Tree, and I don't know whichever ones I'm leaving out, tell us some more about, you know, the color and when you're doing channel checks or you're talking to on these analyst meetings, what are you learning?
I mean, one thing I think I'd add on the channel check is that Target didn't have a good year last year. Fourth quarter wasn't stellar, but I've stuck with them on a channel check basis because, you know, when I walk the stores and when I shop there, you know, I don't think they've disappointed their customers. It's easy to shop there when you do a curbside order at Target. It's fast. They come right out to their car. You know, when you walk around the stores, it's still the right people shopping there. It's, you know, busy people coming home from work. You know, moms with kids in the cart who are, you know, looking to buy a bunch of things and do it in a hurry, but still get some nice stylish things. So despite a difficult environment for Target, I mean, my store checks are keeping me with them. Another one I've stuck with during store checks over the years is Dick's, because they've just been a good merchant in terms of repositioning the business.
I would say everybody is agreeing with you. I'm glad you brought that up because I think everybody loved Dick's throughout the pandemic and even after. And Jen, you said, you know, you may be one of the only people that's negative on the dollar stores as a group, but the names you do like, and some of them are mall names, which I thought was interesting, but you had Kohl's, Boot Barn, Tractor Supply, Dick's, Macy's, Academy Sports. Any final thoughts here, Jen?
Well, I'm totally in favor of Dick's, just like your other guest just said, because, you know, they've done such a great job and they're opening new formats, they're doing it well, and they're just executing the business really well. And that flip back we thought we might see, where they might get hurt because people weren't buying as much sporting goods, really didn't happen as much in that sector. And then we also see Academy Sports turning in really good numbers at the same time. So the sector has held up pretty well, but I will say a lot of market share came out of smaller players in that sector. And then things like Boot Barn and Tractor Supply that are dealing with people that are more rural, that business has been really, really good. But the real surprise, I guess, on my list to you is both Macy's and Kohl's. And I also have to say, you know, something's to buy it at some price, unless you think they're going away. And I don't think Kohl's is going away. And I think that they will get improved as Tom Kingsbury takes over.
Okay. Jan, Chris, thank you. Jan Rogers-Niffen, Chris Graja of Argus Research. Thank you both so much. That's going to do it for us here on the watch list. I'm Nicole Petalides. Keep it right here. Oliver Reddick, Market on Close.
HKD is starting to give up in the power hour. I'm not liking that. Bed Bath of 4.8. Is today just the first time we've had a green candle and we're all way too hyped? But really it's nothing. If you look back here, I mean, in our downtrend, there were days we had green candles. like the volume though. Even inverted hammers, that's good. That's a bullish reversal sign too. Just kind of what we have there. Not a huge wick, but Jonathan's back. I'll just VWAP dip and rally. SI just like gets shut down with volume. Barcodes.
For bulls, risk on across the board. We're watching Bitcoin very closely
There's
as
power
the
hour.
leader in this risk move higher. So tech, kind of a bit of a mixed bag though to start off this week. We just can't quite seem to get Apple soundly positive. Tesla's up 2% today, but yesterday it was a little bit of a laggard. It came back by the close, and today Tesla's higher. But some of the big mega caps still red are weighing a little bit here, despite what looks to be generally a pretty clear message when you combine all the macro indicators
Second
from the
part.
dollar to Bitcoin.
Is this a
and
different live stream?
perhaps a little bit of pushback in some of that from crude.
We're
Let's
missing our
talk about
legs.
it. Firstly, BTC up 3.5%
Oh,
to about
dude.
30.5 right now. It had
Thought
been
it might. Dang
stuck
it.
in a range between about 25 and 28 for the better part of the last couple weeks. And now we see a push beyond that.
Yeah,
So the chart
Restream
in the short
loses
term
connection pretty
is
often.
compelling.
Not sure I'm gonna keep doing it.
30,000 is a really big level. It's acted as a major turning point
Pretty annoying.
at multiple
Line coming
key
down.
junctures throughout the last 3 years. Talked about it quite a bit here. Hopefully
Yeah, I
you've
think
got
it is
the
different.
image in your mind by now. Of
Oh,
where
I thought you were
30,000
back. I thought
played
you
a
were saying
big
I was
role on the
back.
chart, really since the whole COVID era. And we'll talk about it a little bit later on, but here's the short-term look, and we can see in the recent range, we've broken through it. Nice big vertical move to the upside. It's kind of what Bitcoin does. Bitcoin gonna Bitcoin. The narrative behind it, still generally one about the Federal Reserve and potentially a less aggressive path going forward. Now, we'll hear from Kashkari, but today I would also point out that local Chicagoan Austin Goolsbee, who is incoming to the Fed, was sounding a little bit dovish.
CP lights around 8:30. Make your options
so
plays
just
today.
Thinking about the central bank commentary ahead
close.
of FOMC
That'll be
tomorrow.
it.
We might get some more insight, but really the market has got its own interpretation of the future, and it's rolling with it. That's what Bitcoin tells us. Dollar here down about 0.5%. I'm still looking for the dollar to make a new year-to-date low to kind of confirm some of the risk-on tone that is building around this
It's easier to short a stock than
pivot
pumping a stock.
concept. We haven't quite
I don't know
done
what you
that yet. I think if Bitcoin keeps moving,
Easy to
stocks
short a
keep
stock.
moving,
Yeah, just as easy it is to go
probably
long.
means the dollar is going to be breaking to new lows on the year, especially considering that the 10-year yield has already done that.
Easier
So
to
that's
short
kind
a
of been
stock
one of the
than pump a
hang-ups here,
stock.
that yields have had a little bit more obvious downside than the dollar, but generally the dollar softening up continues to kind of pave the way for a risk-on tone. What's interesting today is we've got some of the value shares doing better. VLUE is the best performing factor ETF of about 0.8%. And also notable again is the fact that the Russell is beating the NASDAQ. So typically, if you're getting this kind of big central bank shift narrative playing out in markets, NASDAQ leads. Generally, that's what we've gotten over the last 6 months.
If you're noticing that, you're probably looking at a lot of
but just
heavily shorted
think about
stocks.
is today we see more strength in energy companies,
just continue to rally.
We'll talk about some of the consumer
like
stocks,
the
but that
AMDs,
sector's
the
a bit of a
NVIDIAs, the
mixed bag.
Teslas.
We'll discuss
Might
the
say it's easier to pump a stock
housing
than to
market,
short it.
which is getting quite a bit of shot of life here, up about 3% in the home builders.
All these ones.
Let's look at a couple of charts to put some perspective in here. After the big run we've gotten, ITB, the home builders ETF, is pretty close to the highs from last year and throughout the COVID boom. And this is pretty much where we're at for a lot of charts. If you think about the tech trade and the role that semiconductors play, it's kind of a similar situation where we're basically
within HKD, I'm like
about 20%, 15 to 30% away from the highs for most of the key
I love the
sectors.
consolidation up here, though.
Housing's had a really good comeback here.
Coming down.
Clearly a market that is dependent on rates. Housing was kind of the epicenter of the Fed's pressure last year. We see some of that relief now, part of it coming from the lack of supply for housing, part of it coming from persistent employment-centric demand. And so we are still pondering the validity of this message about a central bank pivot, because the higher stocks go here, back to near records, there's going to be financial condition loosening as a result. When you've got houses doing what they're doing with the home builder trade, when you've got chips doing what they're doing with the SMH ETF back near the highs. We're starting to get into some really revered territory here on the charts. This has been a no-joke rally. I mean, this is serious. The higher highs, the higher lows. Some call it the bull market off the bottom. That's a fair description given the NASDAQ's 20% run. Really should be keeping us alert here, especially while crude oil starts to bounce and we see a little bit of narrative around price controls with the OPEC cut. Reminds us that WTI has trouble falling too far out of the range from last year. We're still sitting at $80 in crude, and when we get these risk-on moves in the market, to see crude oil rallying with it is important, considering also that gasoline prices have actually been trending higher. Crude oil is sitting at $80, but I think Ben Lichtenstein has pointed out very crucially, the gasoline prices are actually trending higher. And that's something to keep in mind because the inflation story is certainly not done yet, but the market has some confidence that maybe it is no longer the driving force for asset prices and maybe for the Fed. All that is with inflation tomorrow and the FOMC. Let's talk about it with Kevin Hanks and Renita Young. Joining me here, Renita in the studio. Kevin's on the line. Kev, we also heard from the Treasury Secretary today, Janet Yellen, about what they're trying to accomplish. So let's talk about it, because even though we do have risk on tied to this notion of Fed pivot, there seems to also be generally relief since the bank panic about the overall economic situation.
Sure, you can see that. You know, you and I have pointed out several times. You could see that in the Russell 2000, right? Its steadiness since the peak of the crisis shows that the banking crisis is dissipating. But Janet Yellen, remember, you have to understand as an investor, as a trader, there's a difference between Janet Yellen, head of the FOMC, HKD, and Janet Yellen, Treasury Secretary. One is an independent body. The other works for the administration. She's part of the cabinet. So she gives a much rosier view of the overall economy, of the banking system in general, than maybe someone would give. She gives the administration's version. So when she says, the U.S. economy is obviously performing exceptionally well with continued solid job creation, inflation gradually moving down, robust consumer spending. So she's giving a pretty solid look at the U.S. economy and giving the administration's picture. Now, it's reality that the banking problem that was caused by SVB and some of the other regional banks is dissipating. You can see that in the Russell, you can see that in the larger banks. But there is still risk out there. We're going to find out how much inflation is sitting in the market when we get CPI tomorrow morning, Oliver. But Janet Yellen, as per her job as part of the Biden administration, is giving a fairly rose-colored glasses view of the economy. Remember, Liz Ann Sanders reported this morning, hedge funds currently sitting with the largest net short position in futures since 2011. So there is some different views of the overall economy right now, Oliver. So, yeah, I think this is interesting, but certainly positive words from Janet Yellen.
Okay. And we're going to get the details from the central bank team tomorrow with the FOMC. Think that's market moving at this point, Kevin? Or does it really matter what they said when it seems the market itself is the one controlling the narrative right now?
I do believe in my career, Oliver, whether it should or not,
HKD.
the FOMC minutes always is a market-moving event. Now, this is going to be interesting because remember what Jerome Powell said in his press conference after the last Fed meeting. They did ponder pausing rate hikes. So I'd like to see how much discussion that took on, how much life that took on before they decided to raise rates 25 basis points. So I think this Fed minutes will be one to go over for sure, just to get the overall tone and see if there was any tone change from the Fed. Oliver, we're late. We're getting to the end, I believe, of the Fed hikes. I think things are going to get a little more interesting here in some of their verbiage and how they went through this meeting. Yeah, I think it's important tomorrow.
Okay, let's talk some of the stock moves here, Renita, because there is a pretty unique tone of optimism being expressed in some of the housing particular trades today, which would fit if we're going to have interest rates stay subdued here. Flooring,
maybe I'll trade it after
the actual
hours.
home builders themselves.
If it hasn't moved.
And the list kind of goes on. Washing machines and stuff. All we're missing is, the walls. You need like a wallpaper business to be rallying today.
It might be. Check it, right? I'm going to check that when we're done with this. But what Kevin said is absolutely right, that the Fed, as soon as the Fed decided to sort of shift its stance a little bit, we saw the housing industry stocks start to get a little bit more positive as well. And so that's the reason why some of these stocks are higher today. I'm looking at flooring company Mohawk Industries. Those shares are higher after an upgrade at Loop Capital. Another reason why the analyst upgraded the stock to a buy from a hold and gave it a $115 price target. That's about a 15% move to the upside from where it's trading right now. But this analyst actually feels like this stock is underappreciated.
Yeah, I know. I'm sick of Restream.
Negative sentiment really pushed these shares down this year in what should have been an up market, right? But this analyst says that Mohawk could make bigger profit margins, and that would be due to the raw material and logistics costs that are reverting now to the historical norms. And in fact, the analyst said that she expects a significant cost deflation or inflation this year, or we should say deflation actually, and that oil prices are going to, or they have been dropping much faster than originally anticipated. So this is positive for this stock. Another one that I'm looking at, washing machines, Whirlpool. We took a look at it earlier today, and it did get a price target that was lowered, but it was an upgrade at Goldman Sachs, upgrade to a new buy from a neutral, and the price target was lowered to $160. Earlier when we talked about it, it was about a 24 or so % move to the upside from where it's trading, but now it's about a 19% move to the upside of where it's trading right now. And Goldman is bullish on this stock because it approves of the company's planned business adjustments, right? Every company is making cuts, finding out where they can be more efficient. And so one of the big things that Whirlpool did was divest of its European business, which was not profitable for the company. So it's done that, and over the past 6 months, it's also talked about several other different initiatives that it's doing to either cut costs or bring in more cash, and that's positive for this company. And then the last one I'll talk about briefly is D.R. Horton, home builder. Those shares are up today. Of course, sentiment for the housing market is helping push it up. But we know that it has been hammered by the higher mortgage rates. You know, we saw mortgage rates go as far as above 7% during this time, and that was just since the beginning of the year, or maybe toward the end of last year, we should say, from 3%. They were as low as 3, maybe 2.5 or so, and they jumped that time, but they've come down significantly since then, seeing that economic strength possibly pushing the housing industry higher. And so when it comes to D.R. Horton, this name is actually up 12% year to date, and it's up yearly about 41%. So we'll find out if it'll be more. Investors, while they see that it's interesting because it's expected to have a tough next quarter or next few quarters, they're looking past that today into the future farther and into the possibility of more gains off of some of this housing market strength.
I mean, we're like a couple bucks for making a new high in the stock, which is amazing. 10 to be exact, 164 the high from 2021. So, I mean, this is taking back all the losses from the dip off the peak, then more on top of it almost. So, I mean, this is a really big move. Certainly seems like we have to embrace a little cognitive dissonance in this market, where on the one side, people are saying we have to have the Fed slow because the economy's, heading down. But then we got home builders trading at almost all-time highs. Some don't make sense, but
the math is not math
for the moment, yeah, the Bulls are winning the argument. Thanks, Vanita. Thanks, Kev. Appreciate it. We got Danielle DiMartino Booth joining us, maybe with some answers to these questions. She's the CEO at Quill Intelligence, a former Dallas Fed advisor, joining us this afternoon ahead of the FOMC.
We are probably getting
tomorrow. Danielle, I want to ask you something similar to a question I posed to Kevin, which was, can we
pounce a little
really
bit.
get any
All of them have a nice
action in
consolidation
trading
from
tomorrow on
today.
the FOMC, or has this market
Sort
just
of,
completely
with the BBY.
dominated the narrative at this point, with stocks trading the way they are, Bitcoin trading the way it is, rates and the dollar? It's like we've already set the path for the Fed.
Yeah, it certainly does seem that way indeed. Markets appear to be in the driver's seat, but time and again, since Chair Powell started tightening policy a year ago already, we've had since March of 2022. Fed advisors, Fed officials have been able to talk down anticipations for the pivot that they all seem to be looking for. So I wouldn't be so sure if we see a lot of evidence tomorrow in those minutes from the meeting 3 weeks ago that there is a lot of cohesion around the idea that they're not finished battling inflation and that the door might even be open for a rate hike beyond the May meeting. I think that could be felt as fairly negative by markets that are not prepared for that.
What do you think at this point would constitute a surprise? I mean, are we in that situation again? I hear you, because it seems like we've had this back and forth multiple times. Ultimately, the market has had to get in line with what Powell's path will be. But are we really at the moment then where they can just tell us something where they've already told us it many times before, and we're that out of sync? I mean, what's the potential for something new here beyond what we've already heard from the FOMC?
So I think, look, people have to realize that the Fed will take the minutes, and even though they're supposed to be a reflection of deliberations that occurred 3 weeks ago, they could certainly reflect if there's any upside surprise in tomorrow morning's Consumer Price Index report. And they could certainly also recognize that there's been more strength in the labor market than what they had anticipated. And again, to your point, even though markets have pushed the Fed to say, hey, we're expecting a rate cut in July, time and again, officials have been able to push back, and you see Fed officials, they've got a whole nother week after Friday before blackout starts in front of the May 3rd meeting. They can continue to talk back expectations because they've done it so successfully time and again. I think that really is what distinguishes Powell, and the fact that he's kept such cohesion on the Federal Open Market Committee, with the one asterisk that we did see Chicago Fed President Austin Goolsbee come out today and speak very dovishly. So let's see if there might be a dissent brewing at this next FOMC meeting.
The potential here for Powell to use more than words. I know this is kind of a read of the player at the table, less so, numbers and data, but do you think we could possibly get to the point, like, what if we're making new highs in the stock market? I mean, we're not that far away from that conversation at this point. Some of the key sectors are almost there. I mean, if we are in that type of scenario, could Powell do a real surprise with an action instead of words? I mean, do you think that he has it in him to do something that's not already priced in by the time of his decision, like a 50 instead of a 25?
Well, I think if that was to happen, because we have to think back to when the market was anticipating a 50 basis point move, and then they ended up moving those goalposts to be full 75%, a 3/4 of a percentage point. If he's
well than I do that the internet and gold bug world in particular, the crypto folks, though, have really been celebrating the response to the bank panic, the move up in the balance sheet that and I will say to many folks' argument does fit in with the narrative they've told us for a while, that balance sheet won't be able to be unwound, that the Fed will get stuck, that will have increasing problems in the economy that will force them to go back to something like QE. What do you say to that argument?
Well, I would just say this, and that's that last week that entire community was very quiet as we saw a large shrinking in the Fed security holdings. I anticipate that that's going to continue going forward. We're seeing a lot of these emergency liquidity measures that had grown a separate category of the Federal Reserve's liabilities. We're seeing a lot of these emergency lending programs come off, get reduced, and it would not surprise me if we're talking about this in 1 or 2 months. Gee, it looks like the Fed's balance sheet just continues to decrease at the same time that the debt ceiling showdown in Washington, D.C. becomes a much bigger subject for market players to consider, because at some point, Treasury Secretary Yellen's going to have to come out and sell a lot of Treasury bills. That's going to suck even more liquidity out of the system. So I would say hold that thought, because we're going to come back to this. The Fed does indeed continue to let that balance sheet roll off, whether or not it fits with the narrative or not.
What role do you think that the response to the bank panic that not just the Fed but also the Treasury made, what role do you think that did have here? Did that supply some new liquidity to the market?
I don't think that it's applied liquidity to the market. These are loans. Remember that. These are loans that are being given to hobbled institutions that cannot make loans, which is how a lending institution would create liquidity in the system. What we do have going on in the background, however, is that Yellen is depleting the Treasury General account, the nation's checking account, if you will, because she's operating under emergency measures. The Treasury is about to get tax receipts in. This is going to give Yellen a little bit more time to continue using liquidity that she has on hand to keep pumping liquidity into the market. Again, that cannot take away from the fact that Chair Powell has successfully continued with mortgage-backed securities, especially now that mortgage rates have begun to tick down a bit, to roll down the size of the Fed securities. So again, I would be very, very cautious about saying mission accomplished on the parts of people who are watching Bitcoin north of 30,000 and people who've seen gold fly as well.
Okay. Good stuff, Danielle. Always good conversation. Great food for thought. Appreciate it.
You good?
Thank you.
Sure thing. Danielle DiMartino Booth, CEO at Quill Intelligence. All right, we'll certainly be tracking the balance sheet and how it fits with the narrative. Right now, though, it's working in Bull's favor. They're able to convince enough to see markets continue to rally.
So that they are pumped.
Keep in mind, we do have some earnings kicking off pretty soon. We've got the banks, but we've also got some airlines.
Pumping for sure. Almost new high of the day.
Next to take a look at a bullish trade in Southwest. Maybe a little comeback story potentially for the disaster that this company went through this year.
Some B actors. The risk with Netflix movies. We watched actually a Netflix original last night. Pretty good. That Maritrard or whatever one. I don't remember what it's called with an M. Wasn't bad. It's pretty biased, you expect, but pretty entertaining. Nat gas moving up. Alright, let's get short squeeze. They have a short position. CB is a great price. Yeah, I'm taking my time on cannabis stocks. My big wick to the upside. I think should move down now. Sometimes the move it took 3 hours to make up here, it'll make up in the last 20 minutes. Back down. BBY moving back up to BWAP. Bitcoin's bumping. No, I heard that though. Something fell. $321 broken. Not bad. Can't tell if it's engulfing candle or not today. I don't think so. Oh, it totally is. Legit. What the heck? Alright, I'm gonna be patient. I got about half what I want. I got it today. Or maybe that's all I want, I don't know. But we do have an engulfing candle there. And increased volume. Very good signs. We can hold that engulfing, that'd be dope. However, there were times when we had engulfing back here and nothing happened. This time, little pump and new lows. So, still break of this low, got losses. This was kind of an engulfing. For hedging. 100% raging. Breaking glass and stuff. You can tell by the level of my voice how ragey I am right now.
Fourth here at that level, but if we break out above that, I do see significant levels here to the upside. But for the earnings announcement, that's really what I'm playing for the May expiration. I think that 37.5, 38 is a reasonable target to the upside.
Okay, all right. Thanks, Tony. Always like the trade. Appreciate the trade history going into this one, and a nice little setup ahead of earnings. Appreciate it. Tony Zhang, Chief Strategist at Options Play. All right, buying 32.5, 37.5. Call vertical into Southwest earnings later on this month. Let's talk some options trades when we return. Tom's got a few of his own that stood out in today's action, and two bearish actually. So a little bit of a contrarian take here ahead of a good close. It looks like stock's pretty firm.
Okay guys, I've got enough time. I'm gonna cut off, do a video. We got cut off anyways today, so lame. Just do a little recap of what we've been over. Thank you guys for your likes. Ace, thank you for your donos, your memberships, you're freaking crazy. Oh, they're not showing up on this stream. Is it reset? But thank you, man. Congratulations all you new members. We'll see you on Discord. Subscribe if you haven't already. Hit the notification bell. Sub up, like up, comment down. Happy money sticks around. We'll see you on the recap. Peace out. Thanks, Dink. Thanks, Big Hugs. Thanks, Ace. Thanks, Al. Thanks, Trader. Thanks, Damien. BBBY about to blast off. Of course. Tom. Tom. Okay. We'll see you guys.